Another great espresso. Today I'm going to talk to you about cash levels at companies across Asia. My name's Andrew Stotz from Stotz Investment Research. And the question I'm going to ask is how much company is held at companies in various countries across Asia? And the next question, of course, is why is this useful? How could we use this information? So let's get started and go through this. First thing you're going to see is that this study that I've just done is a bottom-up study using about 17,700 companies across the world. So this is as wide a data set as I can get. There's companies that are not in this data set that don't have data over certain periods of time, which makes it a little bit more difficult. So again, it's a bottom-up aggregate. And what you can see also is that Asia really came into prominence in this data set in about 2000. You can say 2000 is when Asia started to really be strong, and now it's kind of, Asia's been flat. But across the world, it's been going down as we've seen less companies coming into the stock market and delistings and the like. Just to give you an example of the different countries that are represented, there's about 81 companies, I think, represented in this data set. And you can see the top 10 companies being China, US, Japan, having a large number of companies. In fact, China, for the first time in this data set that I've used, actually has more than in the US. Now, that's not true. US has more listed companies than China, but you can say that the level of large and liquid companies in China is now slightly higher than in the US. And of course, at the bottom of this list with just a small representation is some of the African nations, Uganda, Namibia, and also Lebanon. So let's recall that the cash level of companies as a percent of assets across the world is the blue line on this chart. And that level is now at about 11% or so. And if we look at Asia ex-Japan, we can see that it's almost at 14%. Companies in Asia ex-Japan have always kept more cash on their balance sheets. And we know also the savings ratio for individuals is also high. So it makes sense to some extent that the companies are also keeping a lot of cash. So why is this useful? Well, one of the most common mistakes when valuing companies is the excessive buildup of cash in an analyst's forecast years. Understanding average cash levels of companies in various countries can be used as a guide so that analysts keep it in a certain range of cash levels. An even more relevant measure is cash at companies in a particular sector within a certain country. So if you're forecasting an energy company within a particular country like let's say India or let's say China, then you want to look at the energy companies in that sector in that country. That's another piece of research that I'll present a little bit later as a guide. Since as analysts across all of Asia and fund managers looking across the world, basically what we're doing is we're valuing companies. And so this is an important element in the valuation of companies. So here we have it. Taiwanese, see, this is a chart showing all the companies across Asia from frontier markets to emerging to developed. We can see that the average is about 13.9%, that dotted line. And one country stands out, Taiwan, with a massive amount of cash. Of course, they also have high-tech companies and infotech companies that tend to hold more cash. And the countries with the least amount of cash on their balance sheets is New Zealand and Australia, two developed countries that have a very different mentality, obviously, than other countries within all of Asia. Now, let's just look at this based upon the stage of development of each market. So first, within Asia, we can look at the developed markets and see that Hong Kong is about 13.8% of cash, so about in line with the rest of Asia. Again, if we look at New Zealand and Australia, of the developed markets across all of Asia, they have the least amount. Now, let's look at the next one, which is emerging markets. And we can see that Taiwan, to many people like myself, Taiwan and Korea may appear like they are developed markets, but in fact they're emerging markets. That doesn't mean that they're not developed countries or developed economies, but what it means is that the requirements to be considered a developed market have to do not only with the development of your economy, it's also the access of the ability for fund managers to access that market and the cost and the different problems related to that. And so when we're talking about this, we're talking about emerging markets. We're not talking about emerging countries. So we can see that most of the emerging markets have between 10 and, in the case of Taiwan, that 21. And China's got about 13.9. Now let's look at the frontier markets to finalize this study. And we can see that Vietnam has about 13.3, so about in line. Sri Lanka about 12.8, and Bangladesh about 8.8. So that wraps up this study to try to understand what's happening with cash as a percent of assets as of 2016. This is when we have the most fullest data from the end of 2016. I hope that that can help you to think about the cash levels that you're forecasting when you are valuing companies in Asia. Have a great day.